Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site, we have Chris Dearborn. He is the managing director on Nasdaq's market intelligence desk, and we are here for the weekly review in the markets. Chris, great to have you with me. As always, on a Friday, saw some big gains on Thursday. We gave it all back today, although we are off session lows at this point, but quite a reversal from yesterday to today.
The markets have been a risk-on environment for the most part of the entire first quarter. And to see what's happened the last couple of days have really been kind of a mixed bag. We've seen higher trading volumes. We've seen more moves in the market that have really kind of been more macro generated than really stock specific.
Right, well, you also have, traders are certainly focused around what's happening with the yield curve, that's for sure. And we also saw with the FOMC, let's take a look at the first chart here, how that has impacted the financials. This is a 1 year of the XLF, the financial ETF.
So it's the financial ETF, and what you're looking at here is a 52-week chart. And you can see pretty much from the left to the right, reading across, that it's been trading north of the 26 level for the better part of the year. And like all charts that you put up that we have going forward, that entire December spike down off of Christmas Eve and back has that nice V bottom. So what you've had off the rebound on the V bottom for the first quarter of the year, which is what we're looking at here, is that you came across, we tested resistance at the 200-day moving average, not once but twice, closed above it recently. And then with this week, we not only sold off, we sold from the 200-day below the 50-day, and now we're looking at support at the top of the V-neck at 24.93 based off of that move off the December lows.
Well, there are some sectors that are seeing buying today, of course, utilities and real estate, anything that's involved with dividend paying. So let's take a look at the...
It's definitely a growth over value story.
Right.
It really is right now, and this is where the value is getting hurt.
All right, well, let's take a look at the broader market. Here's a chart of the S&P 500, again, kind of telling the same story as you see with the XLF, but it looks like you guys have identified 2816, which was the level we've been talking about for the past 2 weeks.
We've been highlighting the 2815, 2816 level for the last month and a half, and so is everybody else. And we finally broke above that in the last couple of days, and we had a nice run. Again, you're looking at a weekly 5-year chart here, and you're seeing the same move down on December and the move back up. And what you're looking at here is the 28, 16, 17 level as a support resistance level. This is a key level for the S&P 500. So it not only encompasses the XLF and all the other, every sector on the defensive side, but also some of the more aggressive sides. So with that, you're looking at the growth names like technology, potentially leading us forward, consumer discretionary. Even energy may get a boost here because of the higher price of oil. If this moves higher, you're looking at 2872, which is testing the September highs before the Q4 sell-off.
Right. Well, think about Thursday with the rally that we had and then the sell-off that we've had today. One session is not a market make.
Correct.
Not much has really happened on the overnight. I think, the yield curve kind of has everyone a little bit flustered. And, of course, global data is at the forefront.
You're looking for indicators here of what's going to lead the market forward, right? We're coming to the tail of the earnings season. You had Nike out today. You had Tiffany's out today. You have a couple more next week paychecks, Lululemon, McKesson, and a few others. So with that, we're pretty much done with the earnings season. Q1 gets dragged out a little bit more. Q4 earnings through Q1 gets dragged out a little bit longer than the other earnings session. We also have a couple of major events next week, but some of the product events. So you're looking at catalysts on a single stock name there. But again, the markets are hung on the geomacro political level, right? Anything negative or extremely positive that you can hang your hat on out of China to U.S. tariff talks will move this market. The Fed has essentially taken themselves out with the dovish put, and that was reiterated yesterday with the FOMC meeting, especially with the downgrade to the U.S. GDP. And then Germany comes out missing their flash PMI number for the month, significantly below where we were looking for. And with that, you had Europe lower. So really, the macro picture as a whole is lower, and we're looking for something to spur that up. And the equities are reacting.
Well, let's wrap up. Let's wrap up real quick here. Next week, and you had mentioned we are in an earnings vacuum. This happens at the end of every quarter, where everyone's focused on macro headlines, and there are a number. I think there's 8 or 9 Fed speakers out on the circuit next week. You have GDP. You have a number of personal consumption numbers coming out. So it's really all going to be focused on headline macro.
Headline macro. Last week of trading for the quarter. We've had a really spectacular quarter. As far as returns are across the board, 12, 13%. In the largers, the Nasdaq Composite's up nearly 20. We gave a little bit back today. We're down 2% or so. So let's see if some of that profit taking kicks in if there's no macro event that kind of spurs this market one way or another. And that's what we're looking for.
All right, my friend. As always, thank you for joining me on Fridays. And thank you for joining me throughout the week. I'm Jill Malandrino, global markets reporter at Nasdaq.